Hello students, in the last video we have discussed about the difference between IFRS and generally accepted accounting principles. So today let us discuss a new topic, that is the conceptual and regulatory framework for financial reporting of the important topic. What is conceptual framework? Already we have discussed. So the IFRS framework describes the basic concepts that underlie the preparation and presentation of financial statements for external users as well as internal users. So here framework means, or this IFRS framework which describes the basic concepts, which describes the basic principles which underlie or which will be useful when the preparation and presentation of financial statements for external users. The conceptual framework can be seen as a statement of generally accepted accounting principles that form a frame of reference for the evaluation of existing practices and development of new ones. So here conceptual framework, it can also be seen as generally accepted accounting principles. So these generally accepted accounting principles that form the frame of reference for the evaluation of existing practices and development of new ones. The starting point of the framework is to address the fundamental question of why financial statements are actually prepared. What is the need? The basic answer is to that is they are prepared to provide financial information about the reporting entity that is useful to existing and potential investors or lenders and other creditors in making decisions about providing resources to the entity. So in turn, this means the framework has to consider what is meant by useful information. In a sense, for information to be useful, it must be considered both relevant, that is capable of making a difference in the decisions made by users, and be faithful in its presentation, that is be complete, be neutral and free from error. The usefulness of information is enhanced if it is also comparable, verifiable, timely and understandable. So let us discuss the purpose of framework. It is true to say that the framework seeks to ensure that accounting standards have a consistent approach to problem solving and do not represent a series of ad hoc responses. So here when necessary, ad hoc means when related or needed when necessary. So here the accounting standards, this framework or this accounting standards should be consistent approach to problem solving of the particular company, and which do not represent a series of needed responses that address the accounting problems on the piecemeal basis. Understood? And also which assist the IASB in the development of a coherent and consistent accounting standards. So this framework or financial framework for financial reporting which assist the IASB, that IASB in the development of accounting standard or consistent accounting standards, that is important. And it acts as a guide to the preparers of financial statements. So is it not standard, but rather acts as a guide to the preparers of financial statements to enable them to resolve accounting issues that are not addressed directly in a standard. Understood? And next one, it is a document that helps users understand the purpose and limitations of financial reporting. So it is an incredibly important and influential document that you know. So this is an important or influential document which helps users to understand the purpose and limitations of financial reporting. So this is the main purpose of framework. Understood? So this framework is a document which this helps the users to understand the purpose and limitations of financial reporting. And next one, framework for the preparation and presentation of financial statements. So this framework is to be used called the framework for the preparation and presentation of financial statement, and is a current issue as it is being revised as a joint project with IASB's American counterparts Financial Accounting Standard Board. This is a purpose of framework. The main purpose is to ensure the accounting standards have a consistent approach to problem solving. Understood? So the main purpose of this framework is to ensure the accounting standards have a consistent approach, or else it assists the IASB to develop the new accounting standard or consistent accounting standard, and also which guide the preparers of financial statement to enable them to resolve accounting issues. Understood? You know that as a accountant they have so many issues, so they have to solve that accounting issues. So this framework which helps the preparers of financial statements to resolve the accounting issues that are not addressed directly in a standard. Understood? So some issues are that are not addressed directly in a standard, so that issues can be resolved by using this framework. And also this is one of the important document that you know. Understood? Next we'll discuss advantages or strength of a conceptual framework. Financial statements are more consistent with each other. Consistent. So all the financial statements, if you take balance sheet or if you take profit and loss account, so these financial statements are more consistent with each other. So this conceptual framework which helps the company to maintain the consistency in the financial statement. Understood? And also which avoids the firefighting approach and has a proactive approach in determining best policy. So this conceptual framework which helps the company to take a good approach or proactive approach in determining the best policy, and less open to criticism of political or external pressures. So this is less open or to the criticism of political. As you know, as a accountant they have so many criticism about the political or as well as external pressure. They have some pressures from political people as well as external people, right? So this conceptual framework less open to criticism of political as well as external pressure, and has a principles based approach. So this framework is principle based approach. Understood? There are two types of approach, principle based and rules based approach, that we'll discuss later. This framework has a principles based approach. So principles based approach means it relies on GAP, that is generally accepted accounting principles, that are conceptually based and are normally underpinned by a set of key objectives, and these principle based approaches are more flexible. Understood? The next one, some standards may concentrate on effect of statement of financial position, others on statement of profit and loss. So some standards, we have so many standards, IFRS as well as IAS standards. So some standards, out of these standards, some standards may concentrate on only on effect of statement of financial position or else a statement of balance sheet. So some other standards they focus or they concentrate on statement of profit or loss. These are the advantages of conceptual framework. And next one, disadvantages or weakness of a conceptual framework. A single conceptual framework cannot be devised which will suit all users. So there should be a different kinds of conceptual framework or different kinds of standards, then only that different kinds of standards will suit for all users. So that's why a single conceptual framework which cannot be suit to all users. Next one, need for a variety of standards for different purposes. There should be a need for variety of standards, I already told. So there should be a variety of standards, then only that standards can be suit for all users or different purposes. Understood? So need for a variety of standards for different purposes. You know that as a accountant they should maintain different kinds of books for different purposes. So there should be a different kinds of standards or a variety of standards for different purposes. And preparing and implementing standards may still be difficulty with the framework. That is also one of the disadvantage or weakness. Preparing and implementing standards may still be difficult. Understood? So if you framework, if they want to implement a new standard, so that is what difficult for the framework of the company or framework of the accounting information. So these are the disadvantages or weakness of a conceptual framework. Next we will discuss about principles versus rules based approach. As I discussed, there are two approach, that is principle based approach or accounting system and rules based accounting system. Then what is rules based accounting system? So rules based accounting system means it is likely to be very descriptive. So this rules based accounting system is always very descriptive in nature, and which always relies on a series of detailed rules of accounting requirements that prescribe how financial statements should be prepared. Understood? So this rules based accounting system which relies on a series of detailed rules of accounting, so which prescribe how financial statements should be prepared. The next one, considered as less flexible. Understood? So this is what less flexible, and but often more comparable and consistent. This is what important. So rules based accounting system is more comparable and more consistent than principle based accounting system and than a principle based accounting system. And next one, can lead to looking for loopholes. That loopholes means an ambiguity or inadequacy in the law or a set of rules. Understood? So this rules based accounting system can lead to set of rules or an ambiguity of rules. This is what the rules based approach or rules based accounting system. Then what is principles based accounting system? It relies on generally accepted accounting principles. So these gap are conceptually based and are normally underpinned by a set of key objectives and more flexible than rules based system, and require judgment and interpretation, which could lead to inconsistencies between reporting entities and can sometimes lead to the manipulation of financial statements. So because IFRS are based on the conceptual framework for financial reporting, they are often regarded as being a principle based system. There are some of the changes with the significant work being done to many aspects of framework. Understood? The revised conceptual framework for financial reporting issued in March 2018, in effect immediately for the International Accounting Standard Board and the IFRS Interpretations Committee. So this is about financial reporting framework or conceptual and regulatory framework for financial reporting. If you have any doubts, you can clarify it. Thank you.